Bobby Bao, China had a huge run up over the past 12 months, then a sharp turn down. Now it's just plain volatile. Are these growing pains, or is there something bigger going on here?
I believe these are just growing pains. Market's gone up, so it's very natural that they have these mid-bull market corrections. So it's nothing to be alarmed about. If you look at the total size of margin debt outstanding in China, 1.5 trillion RMB. It's not a small number, but to put things into perspective, total household saving in the country is 63 trillion. Total banking deposit is over 100 trillion. So while it creates a lot of short-term noise, long-term fundamentals haven't changed, and we're seeing a lot of opportunities right now.
Are Chinese regulators doing the right things to manage the crisis? Because they're not allowing short sales in some stocks, they're not allowing you to sell some stocks. Are they doing the right things?
I don't know. I think time will tell. What I do know is that their intentions are well founded. They're trying to bring stability back to the market. So as a long-term investor, I'm encouraged that the government is alert and the government is trying to help with the long-term prospects.
Well, for those who want to step in and buy right now, you like the insurance plays and the banks. Tell me why.
I have liked banks and insurance for quite some time now. Insurance, for example, there's still a huge, what we call a protection gap. A lot of Chinese people are uninsured. And for those that are insured, have been buying insurance products for financial purposes rather than for protection purposes. So as the country, as the population continues to age, and as middle class income continue to accumulate over time, the demand for insurance products is tremendous over the next 15, 20 years. And valuation is actually not that expensive. Banks, valuation is extremely cheap. They're trading as if they're going out of business. They're trading as if there's going to be a major financial crisis right at the doorsteps. And that's not what we see.
Well, you mentioned the middle class. Let's talk about the middle class, because for a long time, the investment thesis for China, which was most popular, is buy consumer discretionary stocks, buy the travel-related stocks, because the emerging middle class in China is spending and they're growing. Will the recent crisis in the stock exchange affect that?
I think it's difficult to say, because the recent correction has only been for weeks, right? If this were to continue for months and years, of course, it's going to weigh on the psyche, right? Same thing will happen in the US. But longer term, those factors that made the middle class rich are still there. So I'm very confident in terms of the medium and long-term outlook for the consumer. And as you know, once you have an apartment, you have a car, what do you do next? You want to see the world. The world's a big place.
And you mentioned valuations on financials are reasonable, if not low. What about the internet sector in China? This is something that U.S. investors play quite a bit of. Tell me about what you think about Alibaba and Baidu, where you're seeing a lot of volatility right now.
Yeah, I was actually a TMT analyst in the U.S. back in 1999, 2000, right? So at the time, you could say that there was a lot of bubble, right? Valuation was very stretched. Today, I can't speak to the whole sector as a whole, but I can say that the companies that we're investing in, they're actually trading a very decent, very reasonable valuations. Mid-20s kind of PE for 40% type of EPS growth.
And then finally, when you buy shares over there, can you talk about H shares versus A shares?
Right.
Some people prefer to stay with the Hong Kong listed shares because they're worried about things like we're seeing right now on the mainland.
Yeah, it's a fair point, right? A-share market has only been around for 25 years, right? So versus the U.S. market that's been around for a couple hundred years, right? So as you said earlier, there's definitely growing pains. But we do see opportunities in both A and H shares right now. So I think I have to be very company and stock specific rather than painting a broad brush.
All right, thanks a lot, Bobby.
All right, thank you.
And thank you for watching The Street.